Hey everyone, it's Zach Beck. When you enter the world of investing, it can be quite intimidating. Now, as a beginner investor, there are thousands of questions going through your mind, such as where should you invest your money and what happens if you lose all of your money. Now, these are normal questions to ask, but the only way you or I can feel comfortable with actually investing is if we take the time to understand what the best options are for placing our money. So what I want to do in this video is break down in detail 7 proven areas where you can invest up to $1,000 to achieve the type of results you're looking for long term. So let's take our time, dive in the details, and jump into it right now. One of the methods that you can use would be a self-managed investment. Now, this is where you would be in complete control of where you're allocating that $1,000. Now, if you have some sort of financial understanding of the markets and understand how to open up a brokerage account online, this might be a good option for you. Just understand that when you do it this way, when you're kind of a do-it-yourself approach, you are taking a bit more risk and you might not have as much financial understanding of where things go long-term. So there is a bit of a riskier approach on this, but you can go ahead and actually do this on various applications. You've probably heard of Robinhood, which is an online trading platform. You can actually get free stocks if you click the link in my description. Feel free to do that if you want to get started in this way. In addition, you could also try WeBull. That's another online trading platform. You can do the same thing, get free stocks if you click below. But the reason for doing this is if you want to go ahead and invest intentionally up to $1,000 to get started, you can utilize these platforms to go and begin trading today. My encouragement to you though is that if you're gonna just get started and you want to use just an individual trading platform like that, you might want to purchase more of an ETF, which is like an exchange traded fund. Generally, they have low expense ratios. Generally, you might have a better approach on this as opposed to something that's more of a riskier, more volatile asset. Now, you can also go ahead and individually select stocks that you might think are out in society that could do well, whether you want to go and purchase a Tesla stock, an Apple stock, maybe an alphabet such as Google stock, maybe you want to go into Lemonade, maybe you want to go into like an insurance company or something like that. That is totally up to your discretion. Just know that when you go to individual stocks and purchase them directly, you are going to have a bit more risk associated with that, but with risk comes reward. There's actually a couple of good online tools that you could use if you want to select individual stocks. I actually review a lot of things on the Motley Fool. That's where I find good stock recommendations. They have a good track record that tends to beat the S&P 500 long term. But once again, this requires more intentional detail, a do-it-yourself mentality, and a mentality as well that you're probably likely going to lose more money initially than you are going to gain over time. And it depends upon what your horizon is for investing that $1,000. But like I said before, if you want to go this route, Robinhood, WeBull, and other online trading platforms are a great way to get started. Another method you could utilize to actually invest up to $1,000 would be to lend it out. And what I mean by this is there are various approaches that you can do today, which is becoming more and more popular, where you do peer-to-peer lending, where you can actually take your money and invest into someone else, invest into their life so that they can go ahead and achieve other financial goals. And obviously then you would earn interest on that loan. Now, this is something that you have to make a very philosophical decision about, because if you are an ardent person against debt and against doing loans, then you might not want to be a part of this, but it's something that you can do. And I know as I bring this up, you might have a couple of questions to yourself, asking yourself, how does this work? How much money am I going to make? And is it safe? And I understand, because those are the questions I had when I was thinking about doing this myself, but it's something that you can do on various platforms that exist right now. On that note, there are a couple of companies that you could consider. One would be Lending Loop and the other would be Lending Club. And oftentimes when you utilize these platforms, you will earn on average the minimum of 5.9% on any sort of loan that you give out. In addition, you don't need a ton of money to get started. You could actually start by investing $25 and it rounds it up. So you actually have the ability to go out and loan money at a relatively low amount, but still get a good amount of interest back. And when you consider right now that interest rates in a savings account are so low and the returns in the stock market are a bit volatile depending upon what sector you're going into, if you're looking for another area to have a more stable approach to receiving a set amount or percentage coming back in comparison to a certificate of deposit or a money market account or in your general savings account, this might be something to consider. Now, those companies exist out there for a reason, because people are trying to get access to funds to do things out in society. And when you're loaning, you are also taking a risk associated with that someone could default on the loan. So it's not completely foolproof, it's not completely risk-free. However, it is one area that you could consider if you're wanting to go ahead and invest $1,000 and hopefully have that money return a good amount over time. One thing to also bear in mind is that this is not necessarily a long-term play. When you invest into the stock market, you're going to benefit from compound interest and the overall growth of a company long-term. When you're loaning money out, you're not going to have that same level of growth over time. You'll get that set percentage back, and generally it'll just complete once the complete balance is due and completely paid back. Obviously, if it takes longer, you might gain and accrue more over time, but once again, that's just something for you to consider. But it is a worthwhile approach to take if you have the ability to invest that type of money and want to get a bit more of a reasonable rate of return right now. Another method you could utilize to invest up to $1,000 would be to use a Robo Advisor. Now, this is on the other end of the investing spectrum. I previously mentioned that you could go the self-managed approach, where you go ahead and actually pick stocks yourself, invest them directly, and actually have to manage your overall account as a whole. Now, on the other side, you could use the Robo Advisor, and I personally like utilizing this approach because it is more automated and more streamlined. And the way that works is basically if you utilize a Robo Advisor, I specifically like to use Wealthfront. What it does is when you go on the platform, you answer a questionnaire which basically gauges your risk tolerance for your investments, and then it will tailor a portfolio, tailor an investment strategy specific to your needs. So if you go ahead and do this, what I would strongly recommend is answer all of the questions accurately. If you do not have the stomach to be able to deal with the ups and downs of the market, take a more conservative approach when you're answering the questions. However, if you really want to go all the way in and say, I'm going for the highest risk possible, be ready for a bit more of a wild ride, but answer the questions accordingly. Then it will produce through an algorithm, an automated approach for your investments. The reason why I like this is, generally speaking, it diversifies your portfolio in accordance with your needs. And because these algorithms, because these robo-advisors are doing this on a constant basis and have a track record of doing so, I would say they generally have a better intuition than us, because as individuals, we might be more emotionally swayed by what we're seeing on television or reading in the news to be able to go and either purchase a stock or sell a stock, in comparison with utilizing Robo-Advisor service, which is going to be consistently putting money into the market. Now, like I said previously, I like to use Wealthfront. There are other services out there such as Betterment and others, but what you're going to find is that when you utilize this type of platform, it's going to generally invest into what are called index funds, which track the overall stock market performance. So what I find is that it's a very intuitive approach, it's fairly foolproof, and then it gets me in the habit of investing without the risk and emotion associated with seeing one stock up, another stock down. I mean, if you've seen like Tesla over the course of the last year, it was all over the map. Now it's up super high. Obviously, emotionally, you might feel like, oh, I wish I had bought that low, which if you did, that would be great. But there were times when it was so volatile that you might have sold when it was low and then bought when it was high, etc. So if you utilize a robo-advisor, the nice thing is that it's constantly adjusting and making sure that you're tracking the trend of the stock market. Because it is more hands-off, there are lower fees or no fees associated with it. Generally, you don't need a very high balance to get started. So from that standpoint alone, it's a good entry point for a lot of beginner investors, and it will get you on the track of saving and investing over time. And I would say one thing to bear in mind is that if you want to actually utilize your skill set and ability to purchase individual stocks, you might consider a hybrid approach where you start investing into robo-advisors, you get that set up and have an automated account going into that, so you're investing almost every month into that, but then maybe a smaller percentage of your money goes into individual stocks. This is completely up to your discretion. It depends upon what you like, but I would say that's something you could consider, and it should help you get in the habit of actually getting into investing. Another essential method that you can utilize to be able to invest up to $1,000 and achieve long-term results is to actually smash the like button for the YouTube algorithm. Now, I'm just kidding about that, but if you wouldn't mind, if you're liking the video so far, please tap the like button. It'll really help the channel out and push this video to other people who might need to hear it. In addition, if you wouldn't mind subscribing to the channel, that would mean a lot to myself as well. The method I want to talk about right now is if you want to invest into your child's educational future. You can do this through various methods, but specifically through a 529 college savings plan. Now, if you're either have children or you're expecting to have children in the future, being able to start saving for their college and education long term is a very effective way that you can utilize your savings right now to benefit them over time. Now, a 529 college savings plan is generally associated with states, so you want to check your state guidelines when it comes to your tax advantages associated with that. Bear in mind that when you use a set 529 plan, you're only going to be allowed to use that expenses towards their education long term. So if you're expecting your child maybe to not go to college, maybe they're going to do something different, you might consider a different option, such as a custodial brokerage account. And this is basically where you open up an account and begin investing for your child once they're born, and then when they turn 18 or 21, depending upon upon what state they live in, that investment account then goes directly to them. You no longer own it, but then they can take that over, use that money for either education or maybe starting a business or doing something else like continuing to invest. But I would say that that's a very effective approach that you might want to take. This is not the only approach you want to take with investing, because obviously you want to build wealth for yourself and for your potential family long term, but you really want to bear in mind that if you are going to plan on having a family, begin investing or saving earlier so that way you're not going to be hit with a huge bill long term, and you will see education probably will change 18 or 20 years from now. So overall, this might be an interesting thing for you to consider. I'm personally planning on doing a custodial brokerage account for when my wife and I begin to have children, but I would say it's up to your discretion. If you're not going to have children, obviously this is not relative to yourself, but then you could take that same money and invest it into the brokerage accounts I said previously, like into individual stocks, or if you go into a Robo Advisor, or if you want to go and lend it yourself. Another effective method you can utilize to spend $1,000 to invest in your future is to pay down your debt. Now, many individuals, whether they have student loans or you might have a consumer credit card debt or whatever it might be, perhaps your automobile, whatever it is, if you can pay down your debt, that generally is going to benefit you financially long term, depending upon the interest rate that you have right now. If you pay off your debt and then once that is done, you can go ahead and begin investing, that is almost more effective than just investing right now and then holding on to that debt for years. Now, you will benefit from compound interest of your long-term investment, so you want to begin investing early, but it's better to tackle your debt first to be able to have a clean slate moving forward. So if you have any sort of debt that's over, say, 3.5 or 4%, you really want to tackle that, because obviously with inflation, the debt will sort of equal over time if it's a low interest rate, but I would still say the less debt you have, the better, because then you don't have monthly payments going towards it. Then you could take that amount you were paying on a monthly basis towards your debt and begin investing that and saving it strategically. Now, if you want to invest $1,000 strategically and get a tax break along the way, one of the most effective tools that I like to utilize is actually through a Roth IRA. And a Roth IRA stands for Individual Retirement Account, and the Roth component means that it's post-tax investment. It's different from your 401k if you have that with your employer. A 401k is pre-tax, meaning that you invest the money directly out of your paycheck into the stock market. You can take it out when you're 59 and a half, but then you pay taxes on it after that time when you withdraw the money. A Roth IRA, you actually invest into it after you've been paid, so you've already paid taxes on it. Therefore, when you invest it into the stock market, it grows tax-free, and then you can take it out of the Roth IRA account at the age of 59 and a half, tax-free as well. Now, this is a very effective tool that you can utilize to begin charting your course for your financial future. The reason why I think this is a very effective tool to utilize is that you're only allowed to invest up to $6,000 a year into it, so generally speaking, you're capped out pretty quickly. But because you can start doing that now, and if you're younger, if you're in your 20s, if you're in your teens or in your 30s, you're gonna benefit significantly from compound interest, because if you begin investing then in your 18 to 20s, that money will easily turn to millions of dollars if you invest up to $6,000 every single year by the time you reach retirement age. Now, I wouldn't utilize your Roth IRA as your only investment vehicle. This should be specifically viewed as a retirement investment, because there are other things that come up throughout the course of your life, and you want to live your life before you retire as well. So if you have the dual approach where you actually have a Roth IRA and then you have your own brokerage account through a Robo Advisor such as Wealthfront, then you can go and touch that money as it's liquid to be able to spend on things that you want, buying a house, etc. And if you can have a Roth IRA, 401k, and a brokerage account, that's even better. So just think about your approach that you're gonna take for your life. But Roth IRA to me is something that when I see someone, it's one of the first questions I ask them when they talk to me about finance. I ask them, do you have a Roth IRA? Because I can tell you, so many people will hear about what a Roth IRA is, but don't take the time to put the effort and energy in just to open up an account. Now, you can talk to your employer about opening up a Roth IRA. You also can utilize Wealthfront. You could do those online trading platforms as well. So a Roth IRA is a very simple account. And once again, the Roth IRA is not the investment. It is simply the account that you use to then invest into the stock market. And then when you invest in the stock market, you can choose whatever works best for you. I like to utilize index funds, but you could still go ahead and individually invest into stocks or other services that exist out there. But you really want to take your time when investigating the best approach to take. But for me, the most important thing is you can do that now, irrespective of your age. And the one benefit also that comes with the Roth IRA is you still can touch the principal that you've put in there, the initial investment, without receiving any sort of tax limitations on that. So it's something that also provides you a bit more flexibility as well. Another method you could utilize to invest up to $1,000 would be to invest in real estate. Now I know you're thinking to yourself, Zach, how in the heck am I going to invest in real estate with $1,000? That won't even cover the closing costs or any of the taxes associated with purchasing a home or a condominium. And you're right, but there are ways that you and I can invest into real estate right now through what are called real estate investment trusts or REITs. And this is something where you actually are basically investing into it like you would into a stock, and then that money will grow over time because that REIT is going to invest in a different residential opportunities or commercial opportunities, and think about how that's going to affect your bottom line because real estate does grow at a bit of a quicker rate than what you're seeing in the stock market right now. Now, it's something to consider that due to the pandemic, the real estate market is a bit different. People are gravitating more towards homes, whereas commercial is not as inviting right now. So it's something you want to do the research on and understand. But if you take $1,000 and invest it to a REIT, that has the potential to gain significantly over time. So it's just something that you want to consider. And I would say that if you like real estate, this is a good segue into it. Obviously, it's more effective if you can actually have more money to buy your own property and then rent it out or sell it, refurbish it, whatever it is that works best for you. But that requires much more capital in the hundreds of thousands of dollars, and also then taking out a loan or getting a mortgage. So it's a bit more complicated. Whereas if you just have $1,000 that you want to invest right now, a real estate investment trust could do it for you. And I just want to bear in mind with all the things I'm saying right now, I am not a financial professional. I'm just a dude on YouTube who has gone through a lot of these different processes, and it's worked for myself. And that's why I want to share it with you, is because I find so many people out in society who are nervous about investing, who don't know where to go, and sometimes they get tricked into doing things that are really foolish. They go into a multi-level marketing scheme, or they do other things that aren't really helpful. But these are the proven track records that work, that don't affect me personally at all. If you do them, hopefully it just helps you personally, and that's why I want to share it with you. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. In addition, if you wouldn't mind, please comment down below. I'd love to interact with you, answer any questions for you, do any research on your behalf so you can make well-informed financial decisions moving forward. In addition, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful remainder of your day. Talk to you next time.